What's up, Tita? So let's do a complete multi-time frame analysis on gold. Let's see what kind of trading opportunity currently we have in this instrument. Now, gold from the lower time frame perspective, we see a significant trading opportunity. Now, before we discuss how we can trade, let's look at the bigger picture to see the general direction in the market, and then we'll jump onto this lower time frame to see how we can trade gold. Looking at first of all monthly perspective. Now, from the monthly point of view, we see that gold was back to back 3 months in a strong bullish move. This is the monthly level of support, and with this long bullish engulfer, gold has a strong bounce from the support, followed by back to back 3 months. We have seen that is strong bullish momentum. Now, after this month, we have seen that after market open, the bulls again tried to create a new higher high, has broken the previous monthly high, and then immediately retreat back. Now, the way the price is forming, as you can see, because it has an impulse created an overextended market breaking all this resistance, now we can expect a significant retracement in this market. So to measure the retracement, if we take our Fibonacci, this is the starting of this move to the end of the move. We see the first 38.2% Fibonacci level, which is the minimum Fibonacci level, is at around 1828 or 1830 level. So what we can expect now, gold at least to come to this level to test this Fibonacci level before creating any impulsive move to the upside again. So with that in mind, from the monthly perspective, we still have bearish possibility on gold. If we look at the weekly time frame, we see that there was a strong rejection from this weekly resistance level. As you can see, this bearish engulfer during the NFP, it has in fact a significant volume in it, and from this weekly resistance level we have seen that gold has rejected to the downside, followed by we have seen previous week a narrower doji. Now that doji in fact looks like a continuation pattern, and because there was a long strong rejection followed by a doji, we can expect another attempt from the sellers to push that price down. And as you can see, this is the monthly Fibonacci level, also aligning with a very important previous resistance zone with this weekly back-to-back two dojis, giving us a very strong resistance turning support here with this 20 EMA. Highly likely that gold at some point will come back down to this level to test this support. Now, if we look at daily perspective to see how the price action is forming, now from the daily point of view, if we see that first of all there is an impulse from here. This is a very strong impulse during the NFP, and we have seen slow consolidation and acceleration to the upside to create a retracement. So if we take again our Fibonacci, we see that gold still didn't retest 38.2% Fibonacci level. So there is a probability for gold to go ahead and test this Fibonacci level. There is one probability. At the same time, as you can see, this is a newly developed up downtrend, created a double bot top here and then has broken down. So gold has left a neckline of this double top formation. If you draw this level of support here with this support here, which is turning resistance here along with daily 20 EMA, we have seen there was a perfect retest of this support here as a resistance with this daily candle, and we have seen a very strong rejection with this daily bearish engulfer followed by a doji, which is the last day of trading week last week. So which is also giving us a possibility for further drop. And as a result, we have seen yesterday again there is a strong red candle. Now the way daily price action is forming, if you closely look at in this zone, we see that all those green candles are very smaller and long wick at the top, and all those red candles are stronger and full body. That's the sign that the sellers putting a lot of volume in this market. So there is still probability for gold to continue to drop even without testing a Fibonacci level. So today, as a result, we have seen after the market open, primarily we have seen an uprise to this testing of this daily resistance zone. Now we see slowly the sellers taking control in the market. So let's see then on the lower time frame how we can find trading opportunity. As we are running a trade on gold, we'll see how this current session's candle is closing to see in fact how gold might behave. As you can see, there was in fact This is the pre-started candle. There is a strong middleman here which has a liquidity in it. As a result, this is the current session's candle. Also, you see that created a lower high with that liquidity grabs candle, which is a very important candle here that has a huge volume in it, followed by today's candle. Also, you see primarily a rejection. Now, how this current session candle is closing will determine what's happening with the gold. Now, if we see that this current candle is closing with a strong bearish candle with a strong red body, we could potentially see that gold might continue to drop further. So if we see a strong rejection from this level, we will consider going short again or adding one more position on gold to take this move to the downside with a high probability trade setup. On the other hand, if we see that this current session candle closing as a bullish candle, we'll wait to see how gold is doing. As you can see, there is a local bearish structure. If the price break to the upside, opposite direction of the trend, we could wait for a false breakout along the zone for potential drop again to the downside. So this is the plan that we will be using on gold to take that trade if there is any opportunity coming up on the way. If you find value in this analysis, then smash the like button, and also let us know in the comment section that what you are trading, which way you are trading. Thank you very much. I'll see you soon in my next analysis.